Hello, my name is Dr. George Mochocki, and welcome to Chapter 20, Financial Institutions and Federal Reserve. So, from our discussion, you're just taking me in an online class, a face-to-face class, and we've already discussed this in our discussion boards or during our lectures. You've already utilized Publisher's integrated software, and so you have a good basic understanding that the Federal Reserve is the banking system in the U.S. and that there are other international banking systems that we'll be talking about. And how do I make transactions in other countries? We'll touch a little bit about Bitcoin. It's another way of trying to eliminate the middle person, which is the banking system. We're going to talk about the money supply, talk about a little bit of money facts, global exchange. We're in a global economy. For small business, medium business, you have to understand those concepts. If you take me for international finance, I teach once in a while another community college or one of the community colleges. Like I said, I teach either at College of Lake County, if you're in Lake County, or I teach at Harper College if you're in the northern part of Cook County. Both community colleges are excellent schools, good value for your money. But if you're not able to take me in any of those classes, remember I do the teaching, it helps me pay off my student loans. So always call up and say what other classes Dr. George Mochocki teaching, and that helps everyone out. But if you can't take my full classes to get the real flavor of what's actually going on and get credit for the courses, then look up your community college. Your community colleges serves your local area, and the community colleges all over. They have online classes also. They have other instructors that have on YouTube, just like I am doing here, as a service to help other people to understand. All right, so let's go. Let's talk about the. Remember, this is a summarization. You already have access to my mind maps or concept maps I provide to second tier. You already put all your notes that as you read and did the integrated software and through the lectures. So you already have a very well developed full concept plan by this time. It's another way of taking notes. So now what you're going to be looking at in this hour or less is, did I miss anything? And basically just a quick summarization. So I won't be getting into very much detail, and I'll stop here. You can always stop me, fast forward me, just look at the concept map, see what I felt important for the material that was presented in the course. Okay, so the Federal Reserve, and I'm going to make this a little bit bigger. And those of you know I am live. I don't read off the script, so sometimes I make some adjustments on here, and just like I would in the classroom. Okay, so we're gonna go. I think I usually would go. Let's go about 200, and maybe I go 300. Okay, let's see what we get. Okay, this way you can see the thing. Okay, the Federal Reserve. Who's the chair? It used to be the chairman of the Federal Reserve, and just recently, within the last several years, we have a woman. So now it's the chairperson of the Federal Reserve, Miss Yellen, the first female chair of the Federal Reserve System. Remember, we talked about in the financial management of the course sessions you've taken me for within this series is that women are just as effective as men in dealing with finances. The difference is that women are more conservative, for lack of better words, more want to make sure before they take a risk. Men are more risk taking, just by gut feeling, and maybe that's why sometimes that's good for the economy, sometimes that's good, but a lot of times it may not be as well planned as a woman may who's taking over. Remember, the Federal Reserve, the chairperson of the Federal Reserve is some people say even more powerful than the President of the United States because she or he controls the money supply. Okay? First female, earned her doctorate in economics from Yale, was appointed to the Federal Reserve Board of Governors. She wasn't the chair yet by President Clinton. Almost every factor related to the economy is influenced by the decisions she makes, okay, of the Federal Reserve. We used to have Ben Bernanke, and we had other reservists. Right now, as you know, the Federal Reserve, everyone's anticipating an increase in the discount rate that we'll talk about. That's the reserve. That's the interest rate that the Federal Reserve will borrow to the bank to make sure they if they need short-term cash. And remember, whatever the discount rate to the Federal Reserve, that's the best rate that the banks get from the Federal Reserve, or the mother bank, for lack of a better word. Um, that's what they get it for. That's not what you're going to get it for as a consumer. So if I get it for 3%, or if I raise the interest rate from the Federal Reserve to 2%, you most likely will pay, unless you get extra credit, will be a good credit score. You'll be paying maybe 3 or 4 or 5%, or even up to 7%, depending on your credit risk. Okay. Okay. So now, what is money? Let's talk about a little bit money. Money, money, money. Anything people generally accept as a payment for goods or services. It's just right now, we're all looking at, we're going to talk about the standards and the durability. Now, let me just go through the process, okay? Now, before money, there was a bartering system, and in a bartering system, directing trades or goods for other goods and services. That worked well if the item you're bartering is an equal exchange for value, because all money says, if I do this service for you, it's worth so many units, and I will do something similar, and I could buy be able to do so many units also, for lack of better words. Okay, so if I'm a doctor, I'll pull my teeth. If I'm a plumber, I'll drain your, I'll fix your clogged up pipes. Either one. So what's the value of the service? Remember, we're not talking about. So you're looking at money, and bartering is a value. The problem with bartering, sometimes I may want a something thing, and what I have is a larger thing. I can't cut up a cow or a chicken, because they only did half of what a chicken is worth. Then I've got stuck with another chicken. So what money basically does, it creates standards, and here's the standards. The standards are basically makes it portability, divisibility, stability, durability, and uniqueness. That's what the dollar is. So you take the dollar, you look at it, it's okay. I could stretch it, I could utilize it, and I could utilize that dollar. Unless using, because we're in the U.S., utilize that dollar for certain services that are equal of value for that dollar's worth, and I don't actually have to barter one good for the other. I'm using this instrument, for lack of better words, as my transaction. And more, you're not going to see money anymore. You're going to see more electronic transfer units, almost like in the future. We are in the future. So my debit card, do I ever see a dollar? I just know when I scan it, it's worth so many units equals $1, and they take it out of my debit card. Or if I charge it, they let me buy things on credit, and I have to pay them an interest or usury fee. But who controls that interest rate? Or at least gives me the standard, the benchmark, and that's usually the Federal Reserve. Okay, so let's talk about Bitcoins real quickly. I'm not going to get into it. It's still a new phenomenon going forward. Not really that new, but it's out there. It's a digital currency created in 2008. So this is already, we're in 2015, 16, give or take. So it's already 8 years Bitcoin's been there. It has its ups and it has its downs, and you buy it online, and it's just a trading in units, but somebody had to start it, so somebody's kind of like monitoring it. It's attractive to many users because there's no central regulating authority. It's not, I have to go to the banks, and banks have to report, where did George get $10,000, or where did Jackie get $10,000. I have to always show it, paper trail. With Bitcoin, once I buy the Bitcoins, it keeps me anonymous what I do with my currency, or what I buy. Just like if I do with a cash, or I buy something with cash, no one knows it unless the person I sell it to, or the seller and the buyer, because there's some transaction, and there may be some contractual paper. Electronically, when I buy something electronically, use my debit card, everyone that wants to, because out there, knows that George has purchased this fish from this Dr. Foster's aquarium. I just did buy some fish, and there's real good policy on that. All right, so it's attractive to many users. Transactions are between only two people, without any middleman or middle person. However, this makes valuing Bitcoins difficult. Remember, when you look at the value of a currency, what's the value of a currency? What's the purchasing power of that currency? Right now, the Bitcoin it fluctuates depending on different external environment. It went out. A lot of people lost money because it went out, but then it got resurrected, for lack of better word. Enough on the Bitcoin. We'll carry on more if you take full finance class. We'll get into more detail about the Bitcoins. But it's something out there you have to be thinking about it. And same thing as the Federal Reserve. Some banks are already accepting Bitcoin, and some banks say, hey, this is a currency. If you want to have something that's less transparency, we may have to work with it because that's part of our we're in the money industry, okay? So now let's look about the money supply. And I'm going to go real quickly. The money supply, when you take economics, is broken down in how much amount of money the Federal Reserve makes available for people. There's only so much money I have on there. Like my paycheck, this only saw how much money I could spend. I could take some loans or borrowing. The Federal Reserve does that also, or it could print more money. But then if it prints more money, it devaluates, or inflation could occur or destabilize the value of the currency. Some countries just keep on printing money, but they don't have nothing backing it. So I buy a piece of bread, and it may cost me $10,000, and the equivalent is only about like $3. But in that country, it's so inflated, it's a joke. Okay, so now I could buy a lot of stuff if I have good currency. The money supply is broken down to M1, M2, and M3. I got the arrow here for M2 because that's the one that most of your reports, everything else that the Federal Reserve utilize. M1, money that can be accessed quickly, coins, paper, travelers, checks, etc. M2 is the most common definition. It's M1 here, and it takes money that takes a little longer to obtain. That could be savings accounts, mutual funds. Remember, I could convert it into liquidity. And when we talked about liquidity from the financial thing, liquidity, the most liquid asset is my cash, and then my accounts receivable or my checking. And then later on, I go into CDs or my savings accounts because it may be a little bit harder to pull out because there may be some restrictions because I'm getting, it depends on what kind of checking account I have, and I have to maintain a certain amount of currency in there to get that interest rate. Remember, nothing's free in business. Nothing's free in the government. And how does the government make its money? The federal government, not the Federal Reserve, the federal government makes its money through taxation and other means. The Federal Reserve is basically the balance that makes, that prints the money and puts money into circulation, but it also may need more money or sells bonds for the U.S. government for their operations. So there's two aspects of that, okay? Similar to like in the business. Now the M3 is M2, takes this, but looks at big deposit institutional money market funds. We learned about that in finance. That a lot of the stocks and everything else and bonds are purchased by institutional organizations or like pension plans, retirement plans, unions, other large institutions that are investing their constituents or people within that group their dues, so they'll be able to pay them out in the future. Okay, so let's see some money facts. In 2009, printed 2,000 bills. Each penny cost me more to make a penny, even though there's no copper in there. A nickel cost me 6 cents to make, so I'm not really making too much money. If I start going electronically, there's a savings that the government could utilize that money to help the welfare of the individuals. Bull's track bill on the U.S. is Where's George, and this basically just tells you, and I'm just going to click on it. I'm not going to go through it. We've already went that in the class. But if you look in here, where has George been? You click here, and you just put your Social Security number. You put in the serial number of the dollar, and they'll tell you where it's been tracked through. And a lot of times it could be because people put it through, for lack of a better word, ATM machines to return the money back, goes to the bank, and everything else is being scanned. Goes in there, so you can ensure it's not counterfeit, and it's checking the number. So it'll be interesting, okay? And a lot of students found that very interesting. Over 2/3 of U.S. $100 bills are outside the U.S. A lot of money out there in circulation, but not for us to utilize. Because once I print it, once somebody else has it, it's gone. So it's still out there. There's enough money out there to make everybody millionaires, but it's in the wrong hands. When it's in the wrong hands, different individuals have it. Okay, 90% of paper money has traces of cocaine on it. So it's not mean that cocaine, because remember, it's not that money is the root of all evil. It's what you're going to utilize that money for. Because money could do good, and money could also do bad. All right? So global exchange rate. When I look at global exchange rate, when we talked about it in finances, what is my currency worth to another country when I want to buy their goods or services, vice versa? So when the U.S. dollar falls, it's a weaker dollar. What it basically does, the amounts of goods and services you could buy with the dollar decreases. I can't buy as much because the currency is worth less. But when the value of the U.S. dollar goes down, foreign goods are more expensive, right? Overseas demand for U.S. products, right? What I buy costs me more because my value is that, but now the value of the product I sell exporting, and that's what the U.S. economy needs. It needs to export more. But if our dollar is strong, people can't buy our products because they got to use more of their currency to. To exchange the exchange rate to buy our product. So when we have a weaker dollar, our export is good. People say, hey, now I can buy U.S. products. I like their quality. I like their safety. I know they're a lot safer than a lot of different products made in China, even though they may have some looking over because it's made here in the U.S. and it's supporting our economy. But now people are buying our products because it's a lot safer. You may not like the U.S. policy, but you like our quality of our products and our name and our recognition. Okay? So now U.S. tourism increases for hotels and everything else because it's cheaper to come over here than it is because I get more for our money. Look, if I want to go to Mexico, and a lot of people go to Mexico is a good thing. There's lots of stuff going on. There's a lot of stuff going on that's negative. Same here in the U.S. But if you watch yourself and you're in certain areas, a lot more safer. I mean, it's the world we live in. But I could get more for my U.S. dollars than I could go here in a vacation to in the U.S. because the exchange rate. I get more value for my dollar, so I could get better luxury in a foreign country than I do here. But now, if I go to another country where the dollar is weak, I got to spend more of my dollars to have the same services there. Okay. So tourism goes up. That's good for the U.S. economy. That brings more money back in here. Favorable exchange rate because we owe everybody in the world. Earning profits in foreign markets is provided. Now, when our dollar rises, what happens is the amounts of goods and services you can buy with a dollar increases. The value of U.S. dollar goes up for foreign goods are less expensive. What makes the dollar fall or rise? Basically, position of the U.S. economy relative to other global economies. Because if you look at it, if I take a dollar and it says, what do I get for this dollar? Do I get any gold? Nope. Do I get any silver? Nope. Do I get any nickel? Nope. Do I get any steel? Nope. What do you got? You got the production, or you received the production or the output of the gross domestic product. Here's what the dollar's worth. You can buy this many goods. But you get nothing else. So the U.S. dollar is backed by In God We Trust. It says on the U.S. dollar, so I'm not trying to go and run religion. There's nothing backing it. It's just our economy. So if our economy is slowing down and we're not producing that much, the U.S. dollar falls. What could you buy for the dollar? You can't turn it in. There's some countries out there that are backed by gold. So if you turn in their currency, I think Sweden's one of them, or Switzerland if I'm not mistaken, you turn in the currency, you could get either gold shares or gold in reality. Okay? Now, what's the Federal Reserve System? Okay, and you should understand that. The Federal Reserve person controls the U.S. money supply, and it's Janet Yellen, we talked about a little bit earlier. There's 5 major parts of the Federal Reserve System. Just to be aware of it. Remember, you have to understand how it works when they come up with the gross domestic product, when they say we're in recession or depression, or you see why is the Federal Reserve raising the interest rate or lowering it, why the Federal Reserve is raising the reserve requirement, the banks are required. It's everything we've learned already. I'm just reinforcing those terminologies. So it's, yeah, I know what that is. Yes, okay? You have to read the book. You have to do the software. You have to do the lectures. You're not going to be an expert, but you understand this, okay? So we talked about the Board of Governors and determines the U.S. monetary supply, supervises 12 Federal Reserve banks, and the 7 members appointed. I thought I had a picture in here. Maybe not. Okay. And then I got the Federal Reserve. It's 12 members policymaking. Federal Reserve banks, and here it is. So here's the 12 members. Remember, there's 12 Federal Reserve banks. And when you look at this as taking 12 courses. When they say what the gross domestic product, what's the inflation rate? What's the unemployment rate? What's the status of the U.S. economy? They get reports for this region, Minneapolis, remember, English second language, Polish is my first language. I was born in Germany, so some of the words I may pronounce a bit wrong. I know them, okay? And why do I say that? Because we're in a global economy. You have a lot of people who speak 3 or 4 different languages. Most Americans speak one language. I speak 2, so I'm kind of blessed on that. But sometimes I do pronounce some words differently. Okay, you keep on putting it wrong, as long as the effort's there. So you have, Chicago, we're in the 7th district. New York, is basically the one that does a lot of the internationals. That's in the 2nd district. So all these will report to the Federal Reserve, and the Federal Reserve takes all these calculations, all these reports about unemployment rate, interest rates, inflation, standard of living, everything else, and they compile that information, and that's where they say, here's what the overall economy is. So they may say we're coming out of a recession, or we're going into a recession. But not everyone may be affecting that. It's like your GPA. Some classes you did better, others, and you're taking an average, okay? But that gives you a good indicator where the whole country is as a whole. Some parts may be doing better than other parts. Some parts may be really in a depression. Detroit for a long time was, I know it's using that, from a micro going down to the city, it's just coming out. But it was really rough there. But other parts weren't as affected as hard as one area over another. So just think of that when you're in a business and when you're looking at open up a business or investing in certain areas. Okay, the Federal Reserve banks, okay, you had the advisory committee and the member banks of the system. Now, let's talk about the Federal Reserve and 3 types of tools. The Federal Reserve, remember we talked about the fiscal policy, which is the taxes and spending, that the government controls the economy. If the economy is down, you want to bring it up, you don't tax the people more, because if you tax them, there's less money to buy new products, which is to stimulate the economy. Okay, so managing the money supply, that's what the Federal Reserve does. Chart of all the ones listed below. Now, I've got all these here. Now, they have the reserve system. That means how much money banks have to keep for their savings in reserve. Open markets is how much money or bonds, IOUs, the Federal Reserve is selling, and if it means there's only so much money in the system allowed by law. If we reserve how much money the Federal Reserve could print, there's only so much money out there in circulation. So if I issue bonds, I have less money. I'm just capsulizing. There's more to it. When we read the chapters in our discussion, we already talked that when I am issuing bonds, I'm taking money out of the circulation. Look, I have CDs, or I put money in a CD, let's say for 3 months, and I get like 4%, 5% interest rate, which would be good at this time. Okay, that means for that time it's my money. I'm making interest, but I tell them for me to give me a higher interest, I won't touch it for that time. So it's out of circulation in my thing. The government does the same thing, where it takes it and issues U.S. Treasury bonds because it needs money to supply, hopefully for the welfare of its constituents, not always for the war machine. But so it's taking money out. But let's say if the recession, they want to stimulate, put more money in. They can't print any more money, and I need money for people to buy stuff available to them for the bank. So what does the Federal Reserve do? They buy their securities or Treasury notes back, and by buying them back, they put it back. So what I do is I cash in my CD earlier, maybe pay a fine or a fee because I'm pulling out earlier, but now I have cash, and improves my cash flow, improves the cash flow that we've talked about for business, for an individual, but it improves the cash flow of the country. So there's cash, the banks has cash available for lending, so I could get the economy going. Okay, so Federal Reserve. Let's just go on the chart, because I'll do it in the chart. I'm not gonna stop this. I'm not gonna go through all this. So you can look at it. I talked about everything right here. Short-term effects slows the economy. Long-term, right? Immediate results flows money into the economy. Immediate results, when they control the rate increase, discount rate. All right, banks borrows less from the Federals. There's less money to be lent. We've talked about that. Stop the chart. Click. Look at it. Read it. Now I got what Dr. George said. Okay, so we're done with this one. Okay, let's look at the banking system. So those are the 3 tools. You have commercial banks, savings and loan, credit unions, and non-banks. Okay, so now, for some of you who want to look at my concept map, in my mind, I'm reading your mind. Okay, so here's the Board of Governors. Let's go Federal Reserve. I'll do this. Okay, Federal Reserve. What did I have in here? Okay, good. Open market. You could read. Stop. I want you to learn. Pause. Okay. Discount rate. interest rate, charges for the loan. Remember, what I get as a bank, I'm going to have to, I'm a middle person, so I'm going to lend that. I borrowed money, and it's costing me 2%, 3% from the Federal Reserve. I now will take that money to my bank. My job is, we're going to talk about the commercial banks or savings loan, is to lend money out and make money on money. So I'll take the money here and I lend it out, and I get, I charge you 6%. So I'm making I pay them 3%. I'm making 3% on my own after yield and everything else. I may make a percent and a half. It's still more than when I got them using somebody else's money. Okay, so you got commercial banks, you got savings and loan, you got credit union, and what we consider non-banks. Non-banks you're going to find us going to be like insurance companies or savings and loan. They're moving along pretty good. This isn't a bad chapter. It just gives you understanding from a perspective when the Federal Reserve raises the discount rate. What does that mean? That means the interest rates are going to go up. When they lower the discount rate, I will be able to get my interest rates better. When it pulls the reserve requirements and pulls in and raises the reserve requirements, that means the Federal Reserve is taking money out. It's fearful of inflation, so it's trying to supply. It's trying to cool down the economy, for lack of a better word. When it's putting it in, it wants to stimulate the economy or fire up the economy, so it reduces the discount reserve requirement. When I say the reserve requirements, look at it this way, because if I have to put so much for every dollar I'm lending, I got to keep or in the savings or my checking, depends on the requirements the Federal Reserve says, but usually it's those two, from the M2. That means I have less money to lend out to people who need short-term loans, especially businesses who need to buy their supplies, so people could buy their supplies. But if you're unemployed, you can't buy my supplies. So what's the difference? So if I could get you, if businesses are starting to buy inventory and consumers are beginning to buy my inventory, now I start hiring. So when you look at the unemployment rate, real quickly, unemployment rate is the last factor that is affected by the Federal Reserve because it's the last thing. I'm not going to hire more people that I know people are buying my products. And once they're buying it, the business is doing good, then I'll hire another person. So when you look at an indicator, the unemployment rate always lags a lot of the indicators the Federal Reserve supplies to the general public. Okay, so now I got commercial banks. What are commercial banks? Let's go real quickly. Commercial banks is a profit. Remember, profit, I'm out there to make money. A profit-seeking organization that receives deposits from individuals and corporations and uses those funds to make loans in the form of checking and saving. This worked well, but the problem was that the banks were getting, a lot of banks were controlled by men, and the shareholders that invest in the banks and everything else, they said, hey, we want a higher return, so the banks were taking my savings, which was supposed to be more of a stable thing, and using it for high-risk investments. And by doing that, and the high-risk investments went under, also my savings I didn't have the money, I had the cash flow, and then the bank started being solvent. So the Federal Reserve, there's a whole bunch of laws that happen between all the meltdown. Take the financial class at the community college, and there'll be more into it. I just want you to understand what's going on. But it's a profit-making organization, and now there's some rules on the money I do for savings should be split up a little bit differently, or than for the investment, which people that they want the investment, but they understand that they're being paid a higher interest for investing in that riskier commodity, for lack of better words. Okay, there's two types of customers in the banking. What are they? Come on. Depositors and borrowers. Some put in, some borrowed. The problem was the U.S. was not doing much in savings. We're more of a borrower. But now, because of the recession, people are kind of holding their money some aside, not spending everything else. Okay, demand deposits is a technical name for a checking account. I demand my money. I don't have the cash. I write a check, and that's the business we call demand deposit. Money is available on demand from the depositor. Certificate of deposit is a savings account that earns interest. That's all it is, to be delivered on a certificate maturity date. Usually it's your savings account, but when they call it CD, so it gives me, if I say I won't touch it for 6 months, I get a higher return. Not much more, but a lot better than I do in my regular saving. I can take it out daily, so there they pay me interest on a daily fee, for lack of better words. Okay, time deposit is a savings account. A bank require prior notice before you can make a withdrawal. And other services, you got credit card, financial counseling, automatic payments, individual retirement accounts, IRAs, brokerage firms, safe deposit box, and traveler's check. Okay, so that's our commercial banking. Now the other ones we have savings and loans. Now if I look at savings and loans, it was a financial institution that accepts and provides money, home mortgage loans, both savings and checking account. Let me move it here, okay? So if I'm looking at savings provides home mortgage loans, that's all they did. Didn't get into any kind of risky investments or anything else. Often known as thrift institutions because its original purpose was to promote customer thrift and ownership. Now, because of a lot of legislation during the Bush administration to be more marketable or competitive, savings and loans, and we're going to talk about commercial banks and even credit unions, they're all in the same field. So there's no more silos in there, and it was almost like a Wild West. They're trying to kind of well, it is still kind of a Wild West in the financial market, but they're kind of bringing them in. So let's look at credit unions. Now, credit unions are basically, if I look at the credit unions, are a group of organizations from a similar industry that form together, get a better, it's like a cooperative, that get a better deal because I'm a member of this. I'm not just a bank utilizing this service. I'm kind of like a member of that bank. All right, the cooperative. So if I'm looking at that, offer full variety of banking services to the member. They're still a nonprofit organization, enjoys exemption from the federal income taxes. It depends who comes up into the next several elections or what the government, how badly they need money. They could start taxing. They can't tax the individual, so let's indirectly tax the credit unions, and that's another source of income we could get. Because credit unions are growing. People don't like they may not trust their banking system. They feel a little more comfortable from the credit unions. They still provide the same amount of services. Okay, now non-banks, financial institutions accept no deposits, but offer many of the services provided by regular banks, life insurance companies, pension funds, brokerage firms, commercial finance companies, and corporate financial services. So far, I'm not doing too bad. I think I'm doing real good on this. Okay, online banking. Now, if I look at online banking, why do I want online banking? We all got online banking. We start with computers, now it's on smartphone. Eventually, our smartphones, I'm not going to have a credit card. I got pull, if I got to show proof of insurance, I can show them on my online. If I got to show my driver's license, right now they could just look at my pictures or something else. I'm going to ID, and right now I get my driver's license. I got a chip in it, and they see exactly who I am. So I can't falsify that. I think Target utilizes that when you're buying any kind of alcohol. So if you're a foreign visitor and you don't have a driver's license, odds are you can't buy any alcohol there, because when they scan it, it verifies, yes, there is a person. Everything else is on there. Okay, free identity theft protection, right, online. Free credit score monitoring, personal financial service, instant messaging, and banking bot. That's not what attracts people to online. It just makes it so much convenient. It gives in business. It gives me a paper trail. It makes me lets me know exactly if someone is if a check cleared, or if I got money in the bank, or if my significant other hits the bank account before I do, and I go, oh my goodness, she took all my money. Or she spent the money before I could buy what I wanted to buy. Remember, you're a joint account. Okay? Okay, now protecting, the other reason online, protecting depositors for money. So let's look at this. You had the federal FDIC, Federal Deposit Insurance Company, up to $250,000. So if you have $500,000, what do? You have two different accounts where you find another bank. You're better off. Don't put all your eggs in diversification in one banking system. If you got the money, as long as you have a federal FDIC approved. Okay, now SIC approved, and this one here, Savings and Loan Associations, insurance holders, savings and loans also protected, and I think it's for $250,000, and also provides. I think both of them are here, $250. Let me see. Let me just copy. Okay, and I'll put it in here also. Yeah, I mean, because they're all federally sponsored pays. Okay, all right, good. So we have that. You have to look at it. The reason I want to say this is because when you're looking at going to global banking, international banking, there's a lot of banking out there. This one's just that are licensed and authorized to operate within the U.S. but they may not be protected by the U.S. Federal Deposit Insurance Corporation. They may be protected by their home country's insurance if they have one, and most of them will, you know what I mean? But then you have to follow their rules and regulations by that host country. So be aware. You get good interest rates. You get good things. Is it an American base? Are they protected by the FDIC? FDIC means protected by U.S. government insurance. If it's not, you know, Federal Deposit Insurance Corporation. If it's overseas, protected by their. Just be aware. I'm not saying, you know, if I'm looking at something in the UK, European Union, almost as stable. It's not as good as the U.S. systems insurance. Okay, so you got internet banking, not net bank, low brick and mortar, better rates. Why? Because I don't have that building. I have USSA. It's for the military. I was in the military, in the army. Uh, so when I looked at that, so I'm qualified. So I'm using it's like a co-op, but they don't have any facility. They have one someplace in Texas, I think, but out here. So I could use any ATM machine that will dispense money. Just charge me a service charge, but that service charge is paid by this internet bank. Why do I need it? I don't need it. You know what? I don't go to the bank if I need cash or anything else. I go to MTM and they pick up that service charge. I don't pay any service charge. So in the reality, they could give me a better interest rate because they don't have to maintain a brick and mortar system. They don't have to maintain an ATM system like Citibank or what do you call it, Fifth Third Bank or Chase Bank or JP Morgan has not only in the U.S. but worldwide out there. They just pay the service charge. It's a savings. I don't have to worry about the insurance, employees, all that stuff. Good? But it has some limitations, okay? So, you know, if I wanted to talk to a real person, it's kind of harder. I could talk online, but it's not like some transaction I like to talk to face-to-face. Okay, electronic transfer funds, set up from one computer to another, quickly transfer more economically. Debit card, Debit card serves the same function as a check. It draws the fund from the checking account. Be careful. The debit card is not the same thing as a credit card. It may not have the same protection. Debit card is like paying cash. That's why a lot of times if I do a charge card, it says we will charge back to your account. When I charge someone a debit card and you want to charge back, I forgot the debit card. Well, we can't. No, a debit card is cash. You already got the cash. I want cash back. It's just a different means. Instead of having a dollar, I'm using a debit card, but does it have the same protection? Some banks offer that as added value. Some may not. So you have to look at your card. Okay, a smart card, direct payment, electronic check conversions like a debit card when you go in a bank. And, you know, and you write a check. Some people do, and they put in that machine where they do a printing. It's actually using a debit card, reading the number. It says he's got the money or no, right off the thing. And the direct deposits gets you into makes my life easier. Because before when I had a check, I put it in the bank. I had to wait 3-4 days. I got direct deposit. They already have it. The banks already have established with that institution or that pay-in institution or that company. So when the money comes in there, it's already good for it because they already have an account with them or in a reserve, and they know that they're good for the money. Making transactions in other countries. Remember, Visa, MasterCard, from a business perspective, makes it easier. But then I also have other things if I'm a larger doing a line of credit. Okay, so let me just bring this together here for a second, class. All right, so you see a letter of credit promises by a bank to pay a seller if conditions are met. Banker's acceptance. It's just different forms of instruments that are acceptable overseas. If you're not using a charge card or a debit card with MasterCard and Visa that already has that establishment. Banker's acceptance promises bank will pay some specific amount at a certain time. And money exchange. Rate of government. Government currency for another. ATM provides foreign currency. ATM already does that for you when you do the transaction for a fee. Okay, remember, business is not free. Okay, now international banks. Now look at how the banks play nicely. You have the World Bank. What's the World Bank? The World Bank, for lack of a better word, thing, is a bank that helps raise standards of living, quality of life to less developed nations improve their productivity. It lends money. It has money. They pay it back, but at a lower rate if you qualify. Okay. And then the International Monetary Fund is the National Monetary Fund fosters cooperative monetary policies to stabilize the exchange of one national currency over another. How do I know what my currency is worth? Remember, I'm not. It's easy when you're doing with. If here's how much gold is worth on the market, but I don't have anything backing it except my economy's output or production. So that's where that comes up. About 188 countries are part of the IMF, exchange foreign currency, because we know which the value, when they had something with someone manipulating some of the value of the currency, there is a devaluation of that currency. And the IMF is the one to make sure everyone's playing fairly and there's no manipulation going forward. Or you're not part of this, what do you call it, part of the IMF. Not a lender, but an overseer, maintaining global monetary system. And again, Bitcoins is an issue or a concern how they do it, because that's not only Bitcoins could be good here in the U.S., it could be anywhere else, and that's the middle person banking is not out of there. Is that value? Who's controlling that electronic version? Okay? So that took care of the banking. What else we have? And again, remember, if your international banking is, depending on the country, they're just as good as some are just as good as some, maybe even a little bit stabler than the U.S. But it's another means. If I don't trust the U.S. banking system, I put it there. But remember, the bank with the IMF, if I'm trying to hide money, they are operating in the U.S. because if the so they have regulations and rules how to make sure you pay your fair share. I mean, the government doesn't care. You put it over there because you get a higher interest rate, no problem, as long as you're paying the government your profits and your dividends. Remember, because that's what sustains the economy and the standard of living and the quality of life that you have, not only in the U.S. or in the country that you are living in, okay, and utilizing their banking system. Okay, let me just bring this down and we'll conclude here. So this is our last, for lack of better words, this is our last chapter. I just want to say I want to thank you for spending the last 20 chapters with me during in the classroom or in the discussion forums that we had. If you've taken me an online class, you've learned a lot about a business, starting from how to start up a business. We talked about economy, we talked about advertising, we talked about marketing, we talked about financial management, we talked about different forms of investment, different partnership. So this is the last chapter. Now you understand the banking system. I just want to say thank you for spending time with me. Again, look me up. I teach at a community college. I teach at College Lake County. If you're in Lake County, I teach at Harper College. If you're in Northern Cook County, it's a community college. You get your best value for your money. You have people who live in the communities. You have business people. You can make your connections, your contacts. You hire people from the community college. You're paying your taxes already in the community colleges. So utilize them for your source to train your employees, or even for your own self-development and training of your own understanding if you're a small business, or come back for professional growth at community colleges. If you're not in the areas, any of those two areas, to be able to take me for other classes. This is how I pay off my student loans. So keep me in mind. Ask for me at those colleges to tell you what classes I'm teaching. Remember, I'm an adjunct or a contractor, for lack of better words, but and I teach a variety of different classes. You can see some of me, some of you I have followers. Look at me in YouTube. This is just a summarization. You need the book. I mean, you know this, and you could, and it's worked with now. It's all factual. It's good, but you don't have that certificate or that or the degree. And because of that, you still could get the job, you could do that, but that gives you your certification. If you're going to take this and learn it and understand it, use your knowledge so you could get hired and improve your quality of life and your status within the community, your social status, and the status within your organization. Again, my name is Dr. George Mochocki, and I'm so excited to read your final presentation. You'll be doing a feasibility study in this course, which is, you're working as a team, and you'll be presenting to me. I've learned a lot, and we all learn as a collective. This is just a good overview, all 20 chapters. You're not going to be an expert, but you know, taking this series, how each element of different, marketing, advertising, management, HR, finance, investments, banking system, economy. I'm trying to think of all the chapters. Different laws, different business structures, everything else. What all business have to deal with on a day-to-day basis to make this a strong economy, make this a strong, not only locally but nationally and hopefully globally. All right, my name is Dr. George Mochocki, and I'll see you in another class that I teach. I teach marketing, I teach advertising, I teach international business, I teach HR, consumer behavior, strategic management, just to name a few. Okay? Bye. And thank you again for spending the time with me.